be classified under. Okay, you started recording the class already, right?
Yes, sir.
Okay, thank you. So, I hope Olajumoke can hear me, or she's not there. Olajumoke, can you hear me?
Yes, sir, I can hear you. My network is quite bad. So my speaker is not that loud.
Okay, sorry about that. So let's start bank reconciliation statement. So, okay, if you are talking about, there's no how you talk about bank reconciliation statements that you are not going to talk about, bank statements, because bank reconciliation statements, talks about the difference between your cash book and the bank statement balances. And I want to believe that Mr. Yoda has explained what cash book is, or have you done cash book? Let me put it that way. Have you done cash book? Have you done cash book?
You would have done it actually. No, I'm just joining the class.
Okay, you are just joining the class, right? Okay, no problem. So, in your material, so I think the word banking consolidation statement is classified under bank. Can you hear me?
Yes, sir.
So it's classified under banking system and services, and some of the things we'll be learning, I mean, at the end of the chapter. So you should be able to know the types of accounts a business can open with bank. Sorry, I want to pick my glass. I mean, I use glass, so I want to pick it in my bag. I just go back on the office. Just okay. Okay, we can continue. Can you hear me?
Yes, sir.
Okay, thank you. So, yeah, under that, we are going to learn. Okay, at the end of this course or this topic, you should know the type of accounts a business can open with bank, understand what interbank transfer is, then understand the role and operation of electronic funds transfer, then also recognize the causes of discrepancy between the bank statements and the cash book, and also to determine the cash available to a business for inclusion in the end of period statement of financial position. Then the last but not the least, which is preparing bank reconciliation statements. So, in this chapter, one of the things we'll be talking about is the ways to guide against the loss of cash through thefts and fraud is to open and maintain a bank account. So the reason why people open bank accounts is majorly because of what's thefts and fraud. So people open bank accounts so they can you hear me?
No, I did not hear the last thing.
Okay, I said people open bank accounts because they want a guide against thefts and fraud. Do you understand now? So why people open bank accounts is because they want a guide against thefts and fraud. Then I think one of the reason also is to avoid going about with too much of cash at hand. So the function of the bank is to keep our money. So bank is just like a place where our money are kept. Do you understand now? And apart from guiding against theft, a business entity or customer can also enjoy some credit facilities and professional advice from his or her bank. And from there, we have two main types of accounts a customer may keep with the bank. So the first one is the current accounts, and the second one is what? The savings accounts. Are you following what I'm saying now? So we have the current accounts, then we have the what? The saving account. So what is current accounts? Current accounts is operated by the use of check. Do you understand what I'm saying now? Current account is an account that can be operated by the use of check, and money can be withdrawn from the account anytime without giving a prior notice to the banker. So for this reason, it is called the demand deposit. So the customer, in current account, the customer does not enjoy any interest on current account balance. Do you understand now? So customer hardly enjoys any interest on current accounts. And in few cases, we might have little interest that will be given by the bank. In few cases, there might be little interest given by the account, by the bank to the account owner. So then also in current accounts, customer may be granted an overdraft. You know what an overdraft means? When you withdraw more than what you have in your bank. You understand now? So that's bank overdrafts. Then a check is issued to the account holder when current account is open. Do you understand what I'm saying now? So a check is issued to the account owner when the current account is open. And each check is assigned with identification number that is serially number. Do you get what I'm saying now? So, and anytime the account holder wants to withdraw from the bank, he has to issue a check for payments to either himself or to any person he has done business with. Then we have opening a bank account. So like different reason why people open a bank current account. And I think the modification to how it can be opened. So then we also have the other one, which is okay. So let me also explain check. What a check is. A check is just like a written order upon a particular banker to pay a certain sum of money to a specified person or organization. And there are three parties to check. The first one is the drawer, the second one is the drawee, and the third one is the payee. So who is the drawer? Someone who issues the check. And who is the drawee? The bank on which the check is written. Are you getting it? And who is the payee? The person to whom the check is payable. Do you understand now? Then we also have so from there, we also have some things which we'll be considering under opening a bank account. So the first one is pay-in slip. So a pay-in slip is a bank customer fill out pay-in slip for which deposits usually in duplicates or triplicates. So some pay-in slips are carbonized. So items to be found on pay-in slips are dates, the bank and branch, the account number, the account name, the notes, and coin denomination. Then we have the amount in words, we have the amount in figure, then we have the total amount, the payer's name and signature, then the payer's telephone number. Then we have the SONA check. So I think the SONA check, we are still going to talk about it when we get to bank reconciliation statement. So then we have let me skip that for now. Then we have the stop payment order. So a stop payment order is when a check is lost or stolen. The owner of the check should issue a stop payment order on the bank. So it should identify the missing check by serial number and the amount if the check had been issued and signed. Do you understand now? So a stop payment order, normally occurs when a check is lost or stolen. So at that point, so the owner of the check, the account owner, should issue a stop payment order to the bank in order to stop any form of check payment to whosoever or to the wrong person. Let me put it that way. In order to stop, the issuing or to prevent the payments of the amounts written on the check to a wrong person. Do you understand what I'm saying now? So then we have the fixed deposit accounts. So in this situation, an account is kept with a bank in form of an investment. I mean, for a case of fixed deposits account, or let me say, an account is kept with a bank in form of investment for a specific period of time. Normally, it's usually 30 days, 60 days, or 180 days. So in this case, a fixed rate of interest is paid by the bank on such bank deposits. And the banker needs to be adequately informed before cash can be withdrawn from these accounts. And also we have the features of this type of accounts as follows. So the first one is the balance standing to a customer credit on deposit accounts. It's payable or rollover on the written application after a stated or agreed period. So then also no commission is charged by the bank. No bank statement is issued to the customer. Both the bank and the customer agrees on the terms and conditions of the relationship, such as the interest rates, amounts, and the duration of the accounts. Then we have the interbank transfer. So interbank transfer is the use of computer and the internet. I hope you are getting the way I'm trying to take it. Do you understand now? So because there are stuffs information we might be needing when we enter bank reconciliation statement. Do you understand what I'm saying now? So then the use of computer and the internet, interbank transfer, or a lot of electronic equipment. Do you understand? In order to transfer funds from one account of one customer to another accounts. Do you understand? Or better still, let me put it this way, like it enables banks to transfer funds from the accounts of one customer to another without the need for exchange of paper documents. Are you following what I'm saying now? So that is interbank transfer. Then we have the ATM also. The ATM is called the auto teller machine. Are you following? So auto teller machine, we have it everywhere. So it's a cash dispenser. The auto teller machine is a cash dispenser, which is designed to enable customer enjoy banking service without coming into the bank. Do you understand now? Then ATM has really been helpful. At least it has really saved people from a lot of stress. Do you understand what I'm saying now? So then let's talk about the credit card. So a credit card is a convenient method of payment which embodies two essential aspects of basic banking function. So, and the transmission of payments and the granting of credits. And it's similar to a check, which is drawn upon the fund of the credit card company rather than upon the personal accounts of the customer. Then also, so then we have the bank statement. So let's move on to the bank statement. So there's no how we will divide and discuss bank reconciliation statements without discussing bank statements. I told you bank reconciliation statements is the difference between your bank statements and your and your cash book. So, and what is cash book? What is cash book? Can I ask? So cash book, okay, let me just explain, don't worry. Cash book is the book for recording, cash book is the book for recording receipts and payments of money in cash or check. Are you following? It's just like a book that is used to record receipts and payment of money, whether in cash or check. So then we have different types of cash book. We have a single column cash book, the 2-column cash book, and the 3-column cash book. Maybe the petty cash book also can be classified under the types of cash book we have. So what is bank statements? Are you there? So can we continue? Yes. So bank statement, this is a statement prepared periodically and sent by the bank to an account holder, showing the transaction between the customer and the bank within a period of time. Are you following what I'm saying now? Bank statement is like a statement prepared periodically and sent by the bank to an account holder, showing the transaction between the customer and the bank within a period of time. I want to believe you all have a bank, right? So that's what's it called? That's statement that your bank used to send to you, sorry, at the end of every month is what we call bank bank statement. Are you following now? It's like a statement that is prepared monthly or based on agreed intervals to the customer and sent by the bank to an account holder, showing the transaction between the customer and the bank within a period of time. Are you following what I'm saying now? So let me show you how bank statements normally looks like. Can you see my screen? Can everybody see my screen?
Yes, sir.
Are you sure you can see my screen? So let me show you how bank statement looks like. So I know a lot of you have seen it before. So bank statements has the column for dates. Are you following? Are you following? So you can check your bank statement and the one to you from your bank to confirm. So this place is always called a particular. Then we have the debit side. Are you following? We have the credit side and we have the what? The balance. So this is a specimen for bank statement. Are you following? So this dates contains, contains those time and period where each transaction takes place. Do you understand? Then the particular is just showing the list of transactions that occur. I mean the name and the list of transactions that occur, like in your bank. Then we have the debits. So the debit side of the bank statement tells us is the payment side. Do you understand now? I think I was trying to explain the difference between, how bank operates. How bank operation is different from the principle of double entry. And what does the principle of double entry says? The principle of double entry says that you debit the receiver, right? And you credit the giver. Are you following what I'm saying now? Is that not correct? Are you guys there?
Debit to giver.
No, you debit the account that is receiving, then you credit the account that is giving. So that's the principle of double entry. Am I right? But the bank's operation, the way bank operates, is different from the principle of what? Of double entry. In double entry, you debit the what? The receiving. Person receiving will be debited, while the person giving will be what? Will be credited. But when it comes to bank, it is otherwise. Do you understand now? So the debit side of your bank statement is the payment side. Are you following what I'm saying now? So it's the payment side. While the credit side of your bank statement is the what? The receipts, the receiving side. Are you following? So if for instance, now, if I send a money into your accounts, are you following what I'm saying now? So the bank is going to send you a what? A credit alert. Are you picking it? Are you picking?
Yes, sir.
Please, I want you to respond so I can know if you guys are really following. So if I send you money into your account now, the bank is going to send you a credit alert. So if you go to the bank and withdraw money, they are going to send you a what? A debit alert. So the debit side of your bank statement is the payment side, while the credit side of your bank statement is the receipt side. Are you following what I'm saying?
Yes,
So for cash book, cash book, the debit side of the cash book is the receipt, right? While the credit side of the cash book is the what? Is the payment side. Are you following what I'm saying now? So you debit your receipts you debit your receipt on cash book, then you credit your payment on cash book. Do you get that? So then periodically in bank statements, I'm still explaining bank statement. Periodically, the customer will obtain the statement from the bank for examination and comparison with his own cash book. So any difference between the two books will necessitate the preparation of bank reconciliation statement. Do you get what I'm saying now? So, at the end of the month, I said bank statement is prepared monthly, right? And why cash book is also a monthly preparation. Bank statement is a monthly preparation. Cash book is also a what? A monthly preparation. So any difference between your bank statements and your cash book will lead to bank reconciliation statements. When you hear the word reconciliation, what does that mean? A question to you. When you hear the word reconciliation, what does that mean to you?
Like a settlement, like agreement.
Okay, thank you. So a reconciliation is just like, in a simple word, it's just like a settlement, just like what you said. So, okay, let me say this. Like, the bank usually send the bank statement to its customer at the end of every month. Do you understand? So then the statement contains the detail of the receipts and the payment by and or on behalf of the customer for that period. Then the receipt will include cash paid into the customer's account and those paid by third party direct into the bank. Do you understand now? So until the customer receives the bank statement or a credit advice transaction alert in respect of the direct credit to the bank account, the business may not be aware of it or the amount involved. So the reason why banks are sending you those SMS is because they want to create a form of awareness. How will you know if someone send you money? How will you know? It is when you receive an alert, right? That's when you know that money has entered into your account. Then the payment or the withdrawal, we also include details of check issued by the customers, bank charges, and payments made on behalf of the customer to the third party by the bank. If the customer so direct the bank, this is called a standing order. Don't worry, we are going to buttress all of this. Then the balance at the end of the period represent the balance as per bank statements, and the balance at the end of the period of the cash book represents, on the cash book, I said, okay, I don't know if okay, you said you were not in class. Okay, on cash book, we always have the debit side and the credit side. And I said that the debit side is the what? The receipt side. While the credit side is the what? Is the payment side. And I said in most cases, in all cases, the debit side is always greater than the what? The credit side. Do you understand now? So it shows that the business is really making profit when the debit side of a cash book is greater than the credit side of the cash book. So at that point, so there's going to be a balance carry down, because say if the debit side is greater than the credit side, that means whatever value you are getting from the credit side of the cash book, you are going to deduct it from the total balance of all the items on the debit side. So then the difference there is going to be the balance carried down. Then for every balance carried down, there must be a balance brought forward. Do you understand? Oh, sorry, balance brought down. Thank you. So the balance at that end of that period of the cash book is what we call the balance as per cash book. Do you understand what I'm saying now? Then the balance at the end of the period of bank statement represent the balance as per bank statement. Do you understand now? So, and in most cases, for the case of bank statement, this balance can be a credit balance, most especially favorable. So when there is a credit balance on bank statement, what do you think is happening? That means it's always favorable, right? That means you are still having money in your bank accounts when there's a credit balance. I think I was trying to explain to a set of people. I said, if you check your alerts, I think most especially if you're an Access Bank user, I don't know. So you are going to see available balance and you are going to see a what? A credit balance. Are you following? So there are always two types of balance, available balance and the credit balance. So the credit balance is most especially favorable because it tells you that you are still having money in your accounts, right? While the debit balance talks about the overdrafts. So when there's a debit balance, most importantly, it's always minus. Have you seen a case of that before? I think I experienced that of recent when my bank deducted a huge amount of money from my bank without even buying anything. So the next thing I saw was minus in my available balance. I just saw minus clinical. So I have to go back to the bank and complain. So when there is debit balance, in that case, I can classify it as debit balance. So it means that there's an overdraft. Are you following what I'm saying now? So there's a what? There's an overdraft. So I'm going to, okay, let's do this. I want to teach you how to prepare bank statements. So should we go ahead?
Okay.
So the question, if you have your material there, do you have your material? So let's solve it. Do you have your material there? So if you check your material, you are going to see Mr. K.A. Afolabi maintains a current account of number 0002345 with XYZ Bank Limited.
What material? What material?
Your ASTWA material, your artwork. Or you can't find it.
No, I don't have.
Okay. Okay, let me share the material. Are you there? So let's share it. So once I share it, just try to screenshot. Maybe you should just screenshot or save it or something. So we'll be able to. Can you see my screen?
Yes.
Are you sure?
Yes, sir.
Okay. So this is the question here. Can you see the question?
Yes.
Okay, this is the question. So maybe you should save it. So the question says that Mr. Afolabi, okay, Mr. K.A. Afolabi maintains a current account of number 000023456 with XYZ Bank. So the balance on the account as at 31st/12/2001 was 15,500 Naira credits. So Mr. Afolabi's transaction with the bank in the month of January 2002 were as follows. So let's answer it together. Let's just answer it together. So before we move on to, so that's not what I planned for today, but let's just do it. So in order to, teach you on how to be prepared or to teach you on how banks prepare their bank statement. Are you following? So if you look at the first transaction now, they said 10,000 Naira cash deposited on the second, sorry. Okay, the first thing, okay, for previous months, there was a credit balance of 15,500 Naira, right? So you are going to post that. So that will be your balance brought forward for 1st of January 2002. Are you following what I'm saying now? Because
Yes,
the balance on the account, look at it, the balance on the account as at 31st/12/2021, and that was the end of 2001. Are you following? So was 15,500 Naira. So you are going to post that on your bank statement and that will go to the balance. Are you following what I'm saying now? I gave you the specimen for bank statement already. I said date, particular or transaction, either of the two. Then we have the debit, the credit, then we have the what? The balance. I said the debit is the payment side, then the credit is the what? The receipt side. Are you following? Then 1,000 naira cash deposited on the 2nd of January 2002. So where are you going to post that to? Is it the credit side or the debit side? A cash deposit of 10,000 naira. Where will you post it to?
That will be on the credit side.
That will be at credit side, right? So you are right. Then we have a check of 2,500 naira issued to Mr. Falabi by one of his receivables was lodged into the bank account on 6th of January 2002. Where are you going to post that to? Is it the debit side or the credit side? A check of 2,500 naira issued to Mr. Falabi by one of his receivables was lodged into his bank. So where will you post that to? Is it debit or credit side? Are you there?
Credit.
So you are going to post it to credit side. Why? Because it is a check deposit. Are you following? It's a check deposit. Then the next one, he drew a cash check number 00262 for 4,000 naira on 7th of January 2002. So the check was presented to the bank and payments received on that date. So where will you post that to?
There's a debit side.
Thank you. There's a cash drawing of 4,000 naira. So you are going to post that on your debit side. Then the next one, receive checks totaling 22,000 from the various customers and load them into the accounts on 14 January 2002. All checks mature for credit to the accounts on 19/1, 2022, right? So the first, okay, are you there? Okay, we skipped the 13. Okay, we've done that, right? So, and there was receive check totaling, that's on 14. So on 14, you are not going to post it's any transaction on 14. Why? Because the check is not mature. Look at the question. Receive check totaling of 22,000 from various customers and lodge them into the accounts on 14. All checks mature for credits to the accounts on 19. So you are not going to post it until I'm coming. You are not going to post it, right? Until 19th. Are you following now? So on 19 now, there's a cash, on 19, okay. Yeah, on 19, you are going to post that there's a check deposit of 22,000 naira, right? On the credit side. Are you following? So there will be a check deposit of 22,000 naira on the credit side. So the next one is there was a standing agreement between the bank and Mr. Falabi that is monthly life assurance payment of 2,150 should be paid directly to insurance company. So that will go to the debit side, right? Then we have a customer living up country deposit a cash sum of 9,500 into Mr. Falabi's account. That's a cash deposit of 9,500. Then we have on 31st XYZ Bank Limited debited Mr. Falabi account with a service charges. So that's bank charges. Is that you call it bank charges or you call it a what? A service charges of 420.50 kobo. Do you understand now? So if you do that now, that means look at it now. For every credit, for every transaction that was posted to credit, it will be added up to the what? To the balance. If you look at it now, we have the balance. The balance brought forward of 15,000 naira, and there was a cash deposit of what? 10,000 naira. So if you add that up to the 15,500 naira, you are going to have 25,500. Am I right? Then the following day, which is, on 6th, there was a check deposit of 25. If you add that up to 25,500 naira, you are going to have 28,000 naira. Are you following? Then also we have a check, a cash withdrawal of 4,000 naira. So for every cash payment, you are going to deduct it from the balance. Am I right? So if you deduct 28,000 naira from 4,000 naira, you are going to have 24,000 naira, and so on and so forth. Do you understand now? You get it? Are we there? Oh, you can hear me. Okay, you can go ahead. Oluwapelumi, ask your question. Oluwapelumi. Ask your question. I'm listening. What's up?
I can't see the screen again. One of the questions.
Oh, sorry. Let me take away this. Okay, I'm listening.
The one that
I can hear you.
Sir, please, can you display the question?
What did you say?
Please, sir, can you display the question again?
Okay, the question. Oh, sorry. Okay, can you keep asking your question? I'm trying to.
Okay. Where it was mentioned.
I'm listening.
What if question whether the check or not, and also not mention that payment was made to the accounts that was supposed to be credited?
Okay, this is the question. Okay, where was your question? Ask. This is the question. Can you ask a question now?
Yes, sir.
Okay, I'm listening.
This question 5 that says that received check totaling 22,000 naira.
Okay, from various customers, right?
And lost
Okay.
All checks matured for credit the account on January 19th.
Okay.
So my question, they did not mention if payment was made to the account because the checks were meant to mature for credit on January 19th. So
Yeah.
what if not mentioned that
Can you come in? Oh, sorry, like there's a noise at your background there. So can you come again, please, so I can hear you clearly? Okay, just sir. Increase your voice. Okay.
Okay, sir. I said, what if it was not mentioned that the checks are to mature for credit on January 19th, but it was still not mentioned that payment was
made, right?
But it was still not mentioned that payment was made. Yes,
I think like what I know is this, like, are you listening? What I'm sure is two things. So there's something we call check maturity. Do you understand now? I think that actually happened. It happened. Like, I think someone issued, can you hear me? So someone issued a check for me. The person issued a check for me, and instead of the person to write that date, I mean the dates of the day he issued the check, so he mistakenly wrote, are you following what I'm saying now? So I think if I can remember, that day was supposed to be, let's say for instance, okay, let me just assume that the day was supposed to be on 14 January 2020, but he mistakenly wrote 24 January 2002. Do you know what the bank is going to do? So in that case, I can lodge the check into the bank, but the bank is not going to make that payment until 24th of January 2002. Do you understand what I'm saying now? Why? Because of the date. So the date written was supposed to be on 14, but the bank wrote 24. So in that case, the bank might not, credit such check into my account until the 24th of January. So I remember calling the man, but there's no way I can reach see him again, because immediately he issued the check, he traveled. Do you understand now? So I have to wait till the maturity date before the money was paid into my account. Do you get the gist? So, but it's two things,
Yes, sir.
like I was about to explain, two things. I think the first one, you can have a case of when a check is received from various customer. I think most times it happens in businesses. Let's say, for instance, now you are working in an organization and a check was issued out to every employees in that organization for salary payments. Do you understand? So the bank can decide to gather them together. They can gather all those checks, as each or individual employees are bringing that check to the bank can choose not to make the payment immediately. Do you understand? Until maybe a specified period of time. So it's two things. Then another thing is the bank can decide to make the payment immediately. If the date on it states that date you took the check to the bank. Do you understand what I'm saying now?
Yes, sir.
Do you get it now? So we can have a case of whereby if a check is taken to the bank, and it has not reached the maturity date, and a case whereby it is taken to bank and it has reached the what? The maturity date. All check mature for credit to the account on 19. Do you understand what I'm saying now? So maybe a case of this, the one we are having here, it might be a case of what I experienced. So instead of the man to write 14, he wrote 24. So that means bank is not going to pay the money until 24th
Yes.
of that month. Do you get the question? Have I answered your question? Have I answered your question?
Yes, sir.
Okay, so let's. Okay, I'm listening.
I'm trying to ask is if you want to be
Okay, can you? I think your voice is skipping. Can you drop it as a chat? So I will attend to it. Just drop the question as a chat. So I will attend to it. If you can hear me,
yes, sir.
drop it as a chat. So I will attend to it. Drop it as a chat so I will attend if you can hear me. So let's go to the bank reconciliation.
Is it? Are we
Can you
going
hear
to
me?
leave particular question?
Okay, check your chat.
Yes.
So let's continue. So let's go to bank reconciliation statement. So for bank reconciliation statement, so it's the statement that is prepared by account holder for the purpose of finding out the difference between the cash book and the bank balances. So in order to reconcile the balance. So like I said earlier, I said bank reconciliation statement is the what? Is the statement prepared by the account holder for the purpose of finding out the difference between the cash book and the bank statement. Do you get that? Do you get that? Okay, let me quickly answer Belumi's question.
Yes,
It
sir.
said, She said, if we want to prepare the bank accounts, will it appear on the accounts? And okay, will it appear on the account? That's the first question. As it was not measured whether it was paid or no maturity date mentioned. So if you look at the question, I don't know if you can still have access to that question. Go back to the question again. So the question states that received check totaling 22,000 naira from various customers and lodged them into his accounts. Are you following what I'm saying now? So he received those checks from who? From various customers. So look at it. It was the one, Mr. Afolabi was the one receiving the check. So he received those checks from various customers. Can you hear me? So he received those checks from various customers amounting to 22,000 naira, and he lodged them into the bank, and the check was paid on 19. So, you know, this is received. And I said anything that has to do with receiving, it will go to the credit side of the bank statement. Do you understand now? So it was received. And that should tell us that since he was the one receiving the check, so it should go to the credit side, which is the receipt side of the bank statements. Have I answered your question? Have I answered your question? Okay, she has gone offline. So can we continue? So yeah, so bank reconciliation statement, I've said it. I said it shows the what? The difference between, you know, it's just like a statement sent or prepared by account holder for the purpose of finding out the difference between the cash book and the bank statement. Then the importance of bank reconciliation statement, number one, it acts as a check on the accuracy of entries made in the books. It verifies the accuracy of bank balances of cash book and checkbook. It helps to detect and rectify any errors. And it also helps to update the cash book by discovering some entry not yet recorded. Then from there, let's go to the reason for disagreement in bank statement. Like, what are the reasons for disagreement between the cash book and the bank statements? So the first one is the unpresented check. We have unpresented check. An unpresented check are check released or issued out to some people, but which are yet to be presented to the bank for collection as at reconciliation dates. Do you understand now? So their check issued have been deducted from the cash book, but not yet presented to the payments at the bank. So they've already been deducted in the cash book, but has not been issued to the bank for payment. So let's look at the effect of unpresented check on cash book and bank statement. So on cash book is going to cause a lower balance. And why is it going to cause a lower balance? Because it has already been deducted on the cash book. Why is going to cause a greater balance on the bank statement? Can you see? Then what are the action required? The action required is that you are going to add the balance as per bank statement cash book, and you subtract from balance as per bank statement. Are you following?
I'm trying to follow the note, but I don't understand where you're getting your difference from.
Okay, like no. I'm trying to explain. It's not there. I have the note already. I have the notes prepared for this class already. So I'm going to send it to your group page. So I'm just trying to explain, I'm just trying to explain. Do you understand now? So you might not find it in your ICAN pack. Are you following what I'm saying now? So just please pay attention. And if you have any question, let me know. So I'm still trying to explain the reason for disagreement between the cash book and the bank statement. And the first one is unpresented check. So, and what's the unpresented check does? Like I said, unpresented check is a check released to people, but which are yet to be presented to the bank for collection. And I was explaining the effect of unpresented check on cash book and bank statement. I said on cash book is going to cost a lower balances, and on bank statements, it will show a greater balances. And how can you adjust this? So the way to adjust this is to add to balance as per cash book, then subtract from balance as per bank statement. Are you following? Then the
Yes.
next one, we have the dishonor check. So dishonor check are check lodged or deposited in a bank, but were rejected by the bank. Do you understand now? So when you hear the word dishonor check, what does that mean? They are check that are already been deposited into a bank, but were rejected by the what bank. And there are some reasons that can lead to, there are some, okay, like bank can reject check for the following reason. There are reasons why banks can reject a check. The first one is when there is irregular signature. Then number two, when there is insufficient money in the accounts. Then also when there's a difference between the words, I mean, in terms of amounts, in words and in figure. Do you understand now? Then let's check, let me explain what will be the effect on the cash book and the bank statement. On the cash book is going to show a greater balance. So anytime banks dishonor a check, so it's going to show a greater balance on the cash book, and it's going to show a lower balance on the bank statement. Are you following what I'm saying now? So then the only way to correct this is to subtract from the balance as per cash book and add to the balance as per bank statement. Are you following? Subtract from the balance as per cash book, then add to the balance as per what? Per bank statement. Then the next one is uncredited check. So what is uncredited check? Uncredited check are checks which have been received and entered into the cash book and lodged into the bank, but have not been entered on the credit side of the customer bank statements as at the date of reconciliation. So what will be the effect on cash book? The effect on cash book is that it's going to cause a greater balance. Are you following me? Then on bank statements is going to show a lower balance. Do you understand now? And the only way to, okay.
The effects on the cash book and the bank statement, is it the same for all the reasons why checks are rejected?
No, can you come again? Let me get the question.
I said the effect on the cash book and the bank statement, is it the same thing with why the bank statement balance does not always agree? Why
With
there's
the
always
cash,
disagreement
between the bank statements and the cash book, right?
book?
Yes,
Yes.
of course. Of course. So, if there is a dishonor check, if bank dishonor a check, so dishonor check is when a bank rejects a check, right? Are you following what I'm saying now? So if the bank rejects a check, it can lead to what? Your cash book and your bank statements not being in agreement. Do you understand now? Do you get it? So, like, are you following? Okay. Like the uncredited check, I said the uncredited check, like it's just like a check received, they are check received and enter into the cash book and lodge into the bank, but have not been entered on the credit side of the customer's bank. And the effect will be that it will cause a greater balance on the cash book and a lower balance on the bank statement. And how can this be corrected? So it can be corrected by subtracting from the balance as per cash book and adding to the balance as per bank statements. Then the next one is bank charges. So bank charges are paid by customer to their bank for service rendered to them by the bank. Do you understand now? So it's also what we've seen as service charge in the question of bank statement we treated earlier. So then what will be the effect? The effect is that it's going to cause a greater balance on the cash flow, then a lower balance on the bank statement. And one of the things you should understand that the deduction from the accounts of the customer without any information to effect until the bank statement is received. Do you understand now? So like whenever bank deducts a charges for their service rendered to you by the bank. So like in this case, are you following what I'm saying now? So the bank is not going to notify you. In most times, the bank might not notify you until when a bank statement is sent to you. Then the effect is that it will cost a greater balance on the cash book than a lower balance on the bank statement. And how do you correct this? So the only way to correct this is by subtracting balances as per cash book, then subtract balances and add balances as per bank statement. So the next one is standing order. So what is standing order? Standing order is an instruction given by the account holder to the bank to make a regular payment on the account holder's behalf. Are you following? And
Yes.
do you get that now? So standing order is just like an instruction. If you own a bank account now, so you can give a bank an instruction to make a payment on your behalf. So that is called standing order. Do you understand now? So then the bank will the payments and debit your bank statement, but no entry in the cash book. Do you understand now? So there's not going to be an entry in the cash book. Why? Because the bank would have made such payments and debit your bank statements. Do you understand now? And what will be the effect on the cash book and the bank statement? The effect on the cash book is that it's going to lead to greater balance, while on bank statements, it will lead to what? The lower balance. Then what are the way to correct this? So the way to correct this is to subtract from the balance as per cash book and add to the balance as per what? Bank statement. Then the next one is credit transfer. So credit transfer are checks or cash received directly by the bank on behalf of the firm without notifying them until they receive the bank statement. Do you understand now? So
Yes.
we can, are you following what I'm saying?
Yes, sir.
So credit transfer are just like, money that is received directly by the bank on behalf of the account holder. So in this case, the bank does not really have to notify you until when you receive your bank statement. Do you understand now? So at this point here, so there will be, the effect is that the cash book will show a lower balances, then the bank statements will show a greater balances. And how do you correct this? Is by adding to balance as per cash book and subtracting from balance as per bank statement. Then we also have the dividend. So dividend is the part of the profits distributed to each shareholders of an organization, and this is mostly paid directly into the bank accounts of such shareholder. Do you understand now? Then what will be the effect?
On this dividend definition.
What did you say?
Can you come again on dividend definition?
Okay. I said it's the part of the profits distributed to the shareholder. Are you getting me? So this is the profit that is distributed to the shareholder of an organization, and it is mostly paid directly into each shareholder's accounts. I mean, bank accounts. Are you following what I'm saying now? Anytime there's a profit, so those money is paid directly into the shareholders' accounts. So, and the effect on cash book is that it's going to show a lower balance, and on bank statement is going to show a greater balance. And how do you correct this? Is by adding up to balances as per cash book and subtracting from the balance as per the bank statement. Are you following what I'm saying now?
Yes.
So then we still have some other reasons also, so that can also lead to disagreement of cash book and bank statement. So we have direct debit also. So direct debit occurs when a creditor is authorized to ask for payments from the customer's bank. Do you understand? So, and the effect is that it's going to cause a greater balance on cash book, then a lower balance on what? Bank statement. Then, how to correct this is by adding to balances as per bank statement and subtracting from balance as per cash book. Then we have the undercasting of receipts side, or undercasting the receipts of cash book. What's the receipts of the cash book? Is the debit side of the cash book, right? And I said the cash book has to do with the posting of the receipts and payments. Are you getting what I'm saying now? So the receipt side is the debit side, while the payment side is the what? The credit side. So for the undercasting of receipts of cash book, so the balance of receipts side of the cash book may be understated, and if it is understated, it's going to lead to disagreements between the cash book and the bank statement. And when this happens, the effect on cash book is that it's going to lower the balances, and on bank statement is going to lead to greater balances. Then the next one, okay, how do you correct this? Is by adding to balance as per cash book, then subtracting from balance as per what? The bank statement. So let's go to, are you there?
Yes, sir.
So let's go to what's it called? Question under this. So let's go to question. Okay, okay, are you still there? So we have how bank reconciliation statement can be treated. So we have 3 basic methods on how you can treat your bank reconciliation statement. So the first one is preparation of bank reconciliation statements, starting with the balance as per cash book. Then the second one is, can you hear me? The first one is preparation of bank reconciliation statements, starting with balance as per cash book. Then the second one is preparation of bank reconciliation statements, starting with the balance as per bank statement. While the third one is adjustment of the cash book and preparation of bank reconciliation statements. Do you get it now? So there's a question here. We are going to solve it. So we are going to use this question to solve both balance as per cash book and balance as per bank statement. Can I dictate the question for you?
Yes, sir.
Okay. Are you okay? Okay, let me quickly dictate the question. Can you hear me?
Yes, sir.
Okay. Illustration, just write illustration. On 31st July 1993, on 31st July 1993, on July 1993. Okay, you can put your name, please.
Okay.
So your name, okay, your name is Olajumoke, right? So
Yes.
Olajumoke's cash book shows a debit balances of 4,000 naira. Olajumoke's cash book showed a debit balance of 4,000 naira. Full stop, continue.
Okay.
His bank statement show a balance of 4,270. His bank statement showed a balance of 4,270. Full stop, continue. On comparison,
a balance of
4,270. His bank statement shows a balance of 4,270. Full stop, continue. On comparison, the following were found. The following were found. The following were found.
Okay.
Following were found. So
okay,
are you still?
Yes.
Okay. So the first one, you can write 1. Check issued amounting to 2,500. Check issued amounting to 2,500. Check issued amounting to 2,500.
Okay, next question.
Had not been presented for payment. I'm not done with that. Check
Had
issued amounting to 2,500 had not been presented for payments.
For payment. Okay. I've written it down.
Okay. So then B, the bank rejected check amounting to 140. The bank rejected check amounting to 140. The bank rejected check amounting to 140.
Amounting to 140.
Amounting to 140, yeah. Then C, are you there?
Yes, sir.
Standing order of 700 naira. Standing order of 700 naira to a club was not taken into consideration. So a club was not taken into consideration.
Standing order of how much?
Of 700 naira to a club was
700
not
naira.
taken into consideration. Was not taken into consideration. Was not taken into consideration.
Okay.
Then D, a customer, comma,
Okay.
Segun paid 170. Segun paid 170. A customer, comma, Segun paid 170 directly.
Directly.
Yeah. Directly into the bank without any notice to the firm. Without any notice to the firm.
Okay. Okay, sir. Without any notice to the firm.
So can you hear me? Sorry, I
Yes,
mistakenly moved the stuff. So I said without any notice to the firm.
Yes.
Okay, then the next one, bank charges of 160, 160. Bank charges of 160. Bank charges of 160.
Okay.
Were entered in the bank statement only. Were entered in the bank statement only. Were entered in the bank statement only.
Okay.
So then F, a dividend of 250 naira. A dividend of 250 naira. A dividend of 250 naira was paid directly into the bank. Was paid directly into the bank. Was paid directly into the bank. Was paid directly into the bank and not recorded in the cash book. And not recorded in the cash book. And not recorded in the cash book. And not recorded in the cash book.
Okay.
So the last one, checks. Checks for 1,650. Checks for 1,650. Checks for 1,650 were entered into the cash book. Were entered into the cash book. Were entered into the cash book and paid to the bank. And paid to the bank, but had not been cleared. But had not been cleared. Does not credited. Does not credited. THUS, not credited.
Okay.
So the instruction is you are required to pay, sorry, you are required to prepare. You are required to prepare. You are required to prepare bank reconciliation statement for the month of July 1990. Bank reconciliation statement for the month of July 1993. Do you get it?
Okay, sir.
So
Yes,
can
sir.
we prepare that now?
Yes, sir.
Thank you, ma. Are you enjoying the class?
Yes, sir.
Are you sure?
Yes, very much.
Okay. So now that you have the question, so let's prepare the bank reconciliation statements. So, and it's going to be the bank. Can you hear me? Can you see my
Yes,
screen?
sir.
The bank
Yes.
reconciliation statements. Bank reconciliation statement. Sorry, let me erase this. Sorry. So bank reconciliation statements. Are you following?
Yes, sir.
As at 31st 31st July. Are you following?
Yes, sir.
31st July. Let's say 2022, 2021. So, looking at the question, they said that, are you following?
Yes,
Please,
sir.
I really want you to get it. So looking at the question says on 31st July 2021, we use your name, right?
Yes.
We use your name.
Yes, sir.
So on 31st July, Olajumoke cash book showed a debit balance of 4,000 and let's use our bank statement showed a balance of 4,270. You understand now? So at this point here, so let's prepare first bank reconciliation statement as per cash book. So for bank reconciliation statement as per cash book, that would be bank reconciliation statement balance as per cash book. Are you following?
Yes,
So
sir.
as per cash book now, we are going to have, okay, let me put the Naira here. We have Naira, and we also have Naira, yes? So what's the balance as per cash book? If you check the question, the balance as per cash book is what?
The balance as per cash book showed a debit balance of 4,000 naira.
4,000 Naira, thank you. So the balance as per cash book is 4,000 Naira. So in bank reconciliation statement as per cash book, you are going to add your unpresented check, your credit transfer, and your dividend. Do you understand? So that's the first thing you are going to do. So you add, are you there?
Yes, sir.
So you add the unpresented check. Are you following?
Yes, sir.
Unpresented check. So the unpresented check of 2005.
Sir, did you say that the credit side will come before the debit side
For which one?
for this question?
No. We are not using debit and credit side there. Though we only have 2 Nairas. We have 2 Naira. So there's nothing like debit and credit side on bank reconciliation statement. I said it's like a statement prepared by the account owner showing the difference between the bank statement and the cash book.
Okay,
Do you
so how
understand
do
that?
you know where to put the amount?
Okay. This is it. The balance as per cash book, you are going to
Yes.
post it here. Because this part here, the Naira here is for workings. Do you understand now? So this is for workings and this is for total. Do you understand? So since this is balanced as per cash book, since this is balanced as per cash book, you are not going to post it under the Naira here. You are going to post it here. So this is for workings. And this is for what? The total. Are you following what I'm saying now? Then we have
Yes, sir.
credit transfer. You are going to add credit transfer also. Credit transfer from Shegun, if I'm right? So
Yes,
credit
sir.
transfer from Shegun is 170. Then followed by what? Dividend, right? So you are going to add dividend also.
250.
A dividend of how much?
250.
Dividend of 250, right?
Yes, sir.
So that's 250. So if you add everything together, so these are stuff, if you check when I was giving you the, what's it called? The effects. Are you following? When I
Yes,
was
sir.
giving you the effects, like the first thing I mentioned is unpresented check. And I said you are going to add to balance as per cash book. So unpresented check and also credit transfer also, right? So
Yes.
I said credit transfer also, you are going to add it to balance as per cash book. And what other thing? I also mentioned dividend. I said dividend also, you are going to add it to balance as per what? Cash book. Balance as per cash book. Yeah. So if you add everything together, yeah. So your 25170, 250. So it's going to give us about 2000, if I'm right, 2920, right? Is that correct? So when you add everything together here, if you add everything together here, you have 6,920. Are you following?
Yes, sir.
6,920. So then the next one, you are going to less. Can you see?
Yes,
So the
sir.
first thing you are going to less is dishonor check.
Okay.
You have a dishonor check of dishonor check of 140, right? How much is the dishonor check? That's 140.
That was 140.
Then we have standing order. A standing order of
700.
700. Thank you. Standing order of 700. Then also we have what? A bank charges, right? Bank charges of 160. So what other thing? We have uncredited check, right? Uncredited check. Yeah.
That was entered. Okay, that's
Yes, 1,650. So when you add everything together, you have what? When you add everything together, so
160, 1,650. I'm calling
looking at it, it should be 2,000. The whole of this is 1,000, right? That's 2,650. Do you get it? So you are going to add the 2,650 is going to be in the bracket. Are you following? So you are going to deduct it from this. So when you deduct it from, the 6,920, the answer will be what? 4,270. Are you following? So
Yes,
that 4,270 is called balance as per bank statement. If you look at it now, if you look at the question says that is bank statement, your bank statement, a bank statement shows a balance of 4,270. Do you understand that? So if what you are getting here is not same thing as are you following what I'm saying? It's not same thing as your bank statement balance. So know that there is a mistake. Do you understand now? So anything you'll be getting here must be equals to the balance shown, the balance shown on your bank statement. Are you following? So this will be called balance as per. You can write it here. Balance as per what? As per bank statement. Is that clear?
Yes, sir.
Is that clear? So okay.
Cases where you are not giving the balance as per bank statement. How would you know that?
Of course, you'll be giving. You'll be
Okay.
giving balance as per cash book and balance as per cash statement. And should in case you are not giving, so you should calculate it yourself. Do you get it now? So you understand how to calculate it now.
Yes, sir.
So that's how to calculate it. So the next thing. So the next thing is bank reconciliation statement as per I'm coming. Okay, as per bank statement. Are you there? You know, we've done bank reconciliation statement as per cash book. So let's move on to bank reconciliation statement as per bank statement, right? So can we move on?
Yes, sir.
So we are still going to use the same question. So this question here, so here we are going to have bank reconciliation statement. Are you following?
Yes, sir.
As per bank reconciliation statements, you understand, as at 31st July 2021. Do you understand now? So you are going to write it here as at 31st July 2021. So here is going to be your bank statements as per what? As per.
I can't
Okay,
hear you, sir.
okay, I said this is going to be your balance. Can you hear me?
I can't hear you. I don't know. Maybe it's my.
What about now?
I can't hear you.
What about now? Can you hear me?
I can't hear you, sir. I can't hear you well at all.
Oh.
Okay, I can hear you well now.
Okay, you can hear me now. Thank God.
Yes.
So I said after preparing the bank reconciliation statement as per cash book, so you are going to use that same question. So after using that, the question, please, you can actually help us snap the question, then send it to group so they will know what we are talking about. I mean, Olajumoke, do you get that?
Oh, okay.
So thank you. So I said, can you hear me? Please, you guys should just pay attention. So after preparing that, you are going to prepare bank reconciliation statement as per bank statement. So we've prepared bank reconciliation statement as per cash book. So I said, are you following? So here we are going to have your bank reconciliation statement. Then you have as at 31st. Okay, as 31st July. July is 07 now, right?
Yes, sir.
Then 2001. Are you following?
Yes.
So here is going to be the balance as per bank statement. Balance as per bank statements. So here you are going to have 2 naira. I said the first naira is for the workings, right? Then the second naira is for the what? The totaling. Do you understand now? So for the first one, the balance as per bank statement is how much? It's 4,070. Sorry, 4,270 in the question, right? So you are going to put it there. Then we have you are going to add, you know, everything you subtracted under the balance as per cash book. You are going to add it here. Everything you subtracted under the balance as per cash book, you are going to add it in balance as per bank statement. And what are the items? The uncredited check, right?
Yes.
Are you following? The standing order.
Yes, sir.
We have the bank charges.
And the uncredited check.
And the dishonor check. Okay, we've written uncredited
the dishonor check was.
Yeah, dishonor check was there. Check.
The 140, was it dishonor check or uncredited check?
It was dishonor check, not uncredited check. Uncredited check is 1,650.
Okay.
Do you get it now?
Yes, sir.
So what's the value? Your credited check is 1,650, right?
Yes, sir.
So 1,650. What's our standing order?
Our standing order is 700.
700. So what's our bank charges? 160, right?
160. Yes.
So what's our dishonour check?
Our dishonour check is 140.
140. So if you add everything together, you have that would be 2,650. Do you understand now?
Yes, sir.
2,650. So when you add everything together here, your answer will be what? Plus this. That's about 6,009 what? 920. Am I right?
Yes, sir.
6,920. So you are not going to less everything you added on the balance as per cash book. You are going to less them here. Exactly. You are going to less them here. So less, the first thing you are going to less is what? Unpresented check, right?
Yes,
So the
sir.
unpresented check. So then the dividend, right? Then we have the credit transfer. Am I right? So
Yes, sir.
then for the unpresented check is 25. Exactly.
The unpresented check is 25, right?
Yes, 25.
The dividend is 250.
250. Thank you.
And the credit transfer is 170.
And the credit transfer is what? 170. So when you add everything together, what would be the answer?
2,920.
Thank you. 2,920. So you are going to deduct the 2,920 from 6,920. So when you do that, what will be the answer? The answer will be 4,000. So can you see is equals to the balance as per what? As per cash book. Can you see?
Okay, so this balance has to be the same one that you entered as the balance as
Of
per
course, it must be the same thing. So this one will be called balance as per cash book. Coinsola, can you hear me?
Oh,
So it's going to
I
be,
can.
okay, you can hear me, right?
Yes.
Okay, so that's going to be your balance as per cash flow. So I don't know if we can go to adjusted cash flow. Can we?
Yes, let's proceed.
Okay. Okay, I want to explain something. Okay, maybe when we get to adjusted cash flow. But I also want to give an assignment. Okay, listen. Are you guys listening? So we can have a treatment of overdrafts. I said overdraft. What is overdraft? Overdraft
But that is
occurs.
when you collect excess money from your bank,
Can you come again, please?
like withdrawing money more than the money, normal money you have in your bank account.
So thank you. So bank overdrafts occur when customer has withdrawn more than what he or she has in his or her accounts. Do you understand now? So on this part, the cash book will show a credit balance. Are you following what I'm saying now? So when this happens, the cash to show a credit balance, and there's a procedure needed to reconcile, there's a procedure you need to follow in order to reconcile when there is an overdraft. To reconcile between your bank statement and your cash book. Okay, I'm listening.
This, I don't know her name. I think Anna. She texted me that as soon as she logs into this meeting, she gets logged out and it's repeatedly. So she doesn't know what to do.
Okay, can she click on the link? She can try to click on the link again.
Okay. I did that.
Okay, check your chats. I don't know. Can you copy the link from your chat to her?
Oh, okay.
Sorry about that though. Check your charts.
Yeah. I've not seen anything.
I don't know. I'm trying to do this. Okay. So let me pause this. I don't know. I'm trying to.
Well, I already sent the link that's in the group to her.
Okay, you've sent the one on the group to her.
Yes.
Okay. Do you have
Or
my
this
do you have
invite
my
link.
do you have my WhatsApp number? Can you write me? Let me send it to you on WhatsApp. I'm finding it out too.
Okay, let me check. I don't your WhatsApp number. Okay. Message. Okay, I already sent I.
Okay. Okay. Check. I've sent it, so you can forward it to her. Have you seen it?
Yes, sir.
Okay, send it to her. So let's continue the class then. So we hope she joins.
I sent it to her.
Okay.
Okay, so you say we're going to adjust that account.
Okay, sorry about the break. So let's okay. I think I was trying to explain the treatment of the overdrafts. So I said overdrafts occur when the customer has withdrawn more than what he or she has in his account. So then when that happens, the cash book will show a credit balance. And there's a procedure to this, okay. Let me give you the layout of bank reconciliation statement when starting with overdrafts as per cash book. So we can have an overdraft as per cash book, and we can also have an overdraft as per bank statements. Are you following?
Sorry, sir. Is overdraft the same as overstatement?
No, is not the same thing as overstatement. I think overstatement occurs in a adjusted cash book. Are you there?
Oh,
I actually explained. Can you hear me? I
yes,
explained
sir.
overstate. Okay, have I explained overstatement of receipt side of the cash book? So
I'm not sure.
okay, can you
No.
hear me?
Yes.
Okay, let me come again. Okay, it is called overcast. So we have different types of overcast in cash book. We have the overcast of the receipt side and the overcast of the payments side of the cash book. Are you following me now? So overcast can occur in two ways. So you can have a case of overcast when it comes to the receipt side of the cash book, then overcast when it comes to the payment side of the cash book. I'm looking at the time.
Okay, so go on. I will read.
Okay, let's do it this way. Can we discuss? I want us to take an extra class because I really want us to finish this cash book, and it is very much. We've taken too much of time under control account. So when do you think you'll be available? So
If
this
you
is
are
going to.
available now,
Let's maybe we should put it on a platform.
So it's just going to be like just to finish the bank reconciliation statements.
I think if you can
But
still finish it,
it's not going to be, we are still going to use this platform. So it's not going to be part of the normal stuff. So
So
I
are
just
you
want
busy
to do
now?
it. We should extend the class, right?
No, I'm
yes.
okay.
Oh, okay. So I think if you cannot extend it right now, maybe tomorrow will be better.
What time tomorrow?
Anytime you will be available, I'll be available.
Do
By
you guys?
in the evening, please. Not anytime. In the evening, please.
I mean, okay, I'm a very busy guy. So I'm thinking, though, I'm actually thinking tomorrow morning, maybe very early
By
tomorrow
what
I
morning,
have one time.
maybe 7, by 7 to 8. So 1 hour should be enough.
7?
Wait.
Yeah.
God, I beg.
Okay, let's do it. What about Saturday?
Okay,
Oh,
that's
we
fine.
have Saturday
Eh?
need
But
to
we
be
have
in
class
the
on
evening.
Saturday.
We have
We have
class on
class by
Saturday.
11:30 or 11, but I'm not wrong.
Can we make it in the morning? Maybe around
8, 9.
8, 9 to 10:30. So then you have 1
Yeah,
hour
that
to
one is
prepare.
fair.
It's better.
Please post it on the group. Just call it like extra class. Like we want to conclude. Okay, we'll be okay. Just if you are going to post it, just let it be that we'll be taking the treatment of overdrafts and adjusted cash book. Are you following? So it will be
Yes.
the
Taking a
treatment
treatment
of
of
overdrafts.
overdraft
Yes.
and adjusted cash book.
Can you hear me?
Very
Yeah,
well.
and
Are you there?
adjusted cash book.
Yes. Yeah, adjusted cash book. Are you following? I mean, preparation
Yeah.
of adjusted cash book. So those two things on Saturday. So from 9 to 10:30. So I'll talk to Mr. Muiz about it. Do you understand now?
Should I post it like this?
Yeah, just post it. Oh, no, you can post it tomorrow morning. Just tell them
Oh.
due to no, just tell them we couldn't finish and Mr. Olani wants us to finish the topic like this week so we can move to something else by next week Tuesday. So in this case, a class has been fixed on Saturday. So it's going to be from 9 to 10:30. I think 1 hour or 1 hour 30 minutes should be enough to finish everything on bank statement. So by next week, you are going to start another topic because considering the time now, it's really, so you might not be able to finish up the whole material if we are not careful. So that's why I'm fixing the extra class.
Okay.
So please, by Saturday, just remind me. You can remind me on Friday. Okay. Can you hear me?
Yes, sir.
Either of you can remind me on Friday. Either Konisola or Lajumoke. So remind me on Friday. Thank you. So I'm going to give you an assignment. So I'll drop the assignment on your group. So against Saturday. So thank you very much. Have a wonderful night rest.
You too, sir.
All right, bye.
Bye, sir.
Yeah.